In our previous videos, we talked about the benefits of VA loans and how to get approved for one. In this video, we're going to talk about the common mistakes veterans make when using VA loans and how to avoid them. And let's not waste any time and jump right into the first mistake, which is not confirming your eligibility early in the process. Don't let this happen to you. You want to pull your certificate of eligibility early in the process to make sure that you are able to use VA financing and you don't have to worry about any sort of issues or delays to restore your entitlement. Or worse, find out you don't even qualify to use your VA loan at this time for lots of reasons, which we'll save for another day. But the biggest mistake right out of the gate is not confirming your eligibility. You can go onto VA's website and pull your certificate of eligibility, or if you're working with a lender who's familiar with VA loans, they can go on through VA's portal and pull it for you. But make sure the very first thing you do is get your eligibility confirmed by pulling your COE. The next mistake is not getting pre-approved. And this isn't just for veterans, but really anyone who's getting a mortgage. Always make sure you go through the pre-approval process. A pre-approval letter shows a seller that they can be confident when accepting your offer. It carries a lot of weight in the market, and I can't recommend it enough. Always make sure you get pre-approved, and you can check out our other videos. There is a difference between getting pre-approved and getting pre-qualified. I talked about it in this video that I'll link up here. But make sure you go through the full pre-approval process with the lender. And then finally, the next mistake is choosing the wrong lender. And that is a big mistake, especially when it comes to VA loans, because not all lenders are equal when it comes to VA financing. VA is a pretty unique product, and you want to make sure that you're working with a lender and company that is familiar with VA financing, especially if you're in a market with a very competitive landscape where you might be competing against other types of financing, conventional, or even cash offers. You want to make sure you have a lending partner that can accommodate you in your situation and outmaneuver the competition and help you get under contract. And there is a big difference as far as how lenders handle VA financing, what they charge, and how quickly they can move and get you to the closing table and to make you look attractive to any seller in any market condition. Another mistake you want to avoid is ignoring your credit scores. While VA is very lenient when it comes to your credit scores, you're ultimately going to be paying more interest and have higher costs for things. And this is a time where you're getting your credit report pulled by a lender. You can evaluate your credit report and see if there's any ways that you can improve it to bring your credit score up. It may not necessarily equate to getting a lower interest rate, but over the life that veteran is going to be living in the home and using credit cards and other types of financing is going to really improve the overall cost and interest that the veteran is going to pay. And getting your credit pulled by a lender is a perfect opportunity for you to evaluate and take a deep dive into your credit and see if there's anything you can do to improve it. So don't miss out on this opportunity. The next mistake is overlooking home inspections. This is a time where you're able to go in and inspect the property before going and closing on it. You want to make sure you take advantage of that time and get a home inspection done. This doesn't just apply to VA loans. However, we do see sometimes in the case of dealing with a lot of competition, veterans and some home buyers will waive their home inspection. And that is just something that I would not recommend. If you are able to do a home inspection, absolutely do it. It is worth every penny, especially if you have a good home inspector. Do your research. Make sure you are choosing the home inspector that's right for you, knows the type of property that you're buying, knows the area, weather conditions, and all of that can play a role in maintaining a home and the overall costs. So don't skip out on the home inspection. It really can save you from buying a lemon and save you thousands of dollars down the road should something come up. Finally, the next thing is not budgeting for closing costs. While VA does allow for 100% financing, sometimes veterans don't plan and they don't have sufficient funds for the closing costs. They forget about that. You're not able to roll in the closing costs when purchasing a property like you are with a refinance, even when using VA financing. So you either need to have the funds saved that you have saved that you can use, or you need to go negotiate with the seller to have them cover all or some of the closing costs. Now, closing costs can vary depending on where you are in the country. On average, here in the DC metro area, we're looking at just under 3% as far as the closing costs, prepaids, and escrows. So even though you're using 100% financing or you have the ability to use 100% financing with VA, you still need to accommodate for about 3% closing costs, prepaids, and escrows, and bringing those funds to the table or negotiating to have the seller help in some fashion. Finally, is buying above your means. This isn't something that just impacts veterans again, but it is something that impacts all buyers, especially in this market where costs are high and interest rates are high compared to what we've seen over the last 10 years. And you want to make sure that you have established a household budget and that you are comfortable and able to make this mortgage payment, especially if you're doing the 100% financing that VA allows. Essentially, what you're doing is you're almost upside down depending on if you have that funding fee and how much it was. So you're not able to just go buy a property on Tuesday, find out a month later that you just can't afford it because of maybe the mortgage payment or the cost to maintain the property, and then have to go and sell it. Because you're going to have to pay closing costs again. You're going to have to pay real estate agent commission, and that is going to be a very costly mistake. So before you sign on the dotted line and take ownership over that property, and really before you even get pre-approved, know your household budget, make sure that you're able to afford this home and maintain it along the way. General rule of thumb that I use when it comes to the cost to maintain a property is planning for around 1% of a home's value. So if you're buying a $500,000 house, you need to have somewhere around $5,000 a year to maintain that property. $1 million house, you're going to be looking at $10,000. And that can vary, again, depending on where you are in the country and what type of property you have. For example, if you're buying a condo where you're not really required to maintain the exterior of the property, so that cost might be a little lower. If you're buying an older home, like we have here in Northern Virginia, that cost may be a little bit higher than 1%. But talk to your agents, talk to people, friends and family that you know in the area to see what the cost is to maintain the property, and make sure you don't go over budget. Finally, not working with a savvy real estate agent is another mistake. VA is a very unique product. Not only do you need to work with a lender and a loan officer that are familiar with VA, but you also, and probably I would say almost as or not more important, your agent needs to be familiar with VA financing. There are differences in the contract. There are differences in the negotiation compared to other types of financing and other buyers. You want to make sure that they're familiar with your situation. If you're, being relocated to the area, the timing, how to show properties because you're, overseas. There's lots of nuances when it comes to working with veterans and active duty service members, and you want to make sure that you are working with a real estate agent that is familiar with those and can accommodate you in your situation, and most importantly, can negotiate on your behalf, because I have seen the difference in our clients getting under contract is because of the agent they decided to work with. We've seen people have success working with certain agents, and other people just completely miss out property after property because their agent was just dropping the ball or just wasn't familiar with VA financing. And the last, and I know I've said this many times, but this is the last mistake, and that is not understanding the funding fee. I talked about this in previous videos. I will again link them here, but VA doesn't have private mortgage insurance, but it does have a funding fee. And depending on how much you're putting down, that funding fee can range from 2.15% for your first time up to 3.3% if you're using 100% financing. You see a significant drop to the funding fee when you are putting 5 or 10% down or more. You potentially could be exempt from the funding fee. Again, going back to the first mistake, you want to confirm your eligibility and your entitlement early on in the process so you are aware and understanding how much of the funding fee you're going to pay depending on how much you're borrowing. It is possible that you could be exempt from the funding fee if you are over a certain percentage of disabled. After retiring, you are able to not pay the funding fee. If you are going through the retirement process and they haven't declared you disabled yet, or they haven't figured out the percentage, that's okay. You can go back after closing on the purchase and get that a portion of that funding fee refunded to you. What they will do is they'll do a principal adjustment. They'll take the balance and just pay down your mortgage, depending on the percentage of the funding fee that needs to be returned to you. That's something that we've helped our clients in the past. And if you are new here, my name is Tim Kelly. I am a loan officer right outside of Washington, D.C. And the purpose of this channel is to help you manage your mortgage and finance your real estate goals. So if you enjoyed this video, go ahead and subscribe and hit the notification bell, because we have plenty of VA loan videos coming out in the future, and other products we'll be talking about as well. And you don't want to miss out on those. If you have any questions, put them in the comments, or if you know of a mistake that I didn't cover in this video, definitely let us know. Let's help each other out by sharing all of the mistakes and things we've learned in the comments. And I appreciate you guys, and we'll see you on the next one. Thanks for watching, and if you found this video helpful, check out some of these other videos. You might find them helpful. So check them out. Please.